In today's session, we will be continuing to work with the AC2, that is the acceleration decelerator oscillator, which we have been working with for the last five webinar sessions since we started. We have been working with AC2. Till yesterday, we finished the setup while using SMA and min-max. Today, we will be replacing the SMA and min-max. Actually, we will be starting afresh. The only thing which we will be continuing to use is this AC2, which we will use to determine the change in trend from bullish to bearish or from bearish to bullish, and the Bollinger bands will help us stay with the trend, which will be pretty handy. I hope most of you are aware of the nitty-gritties of the AC2. Still, here you can go through these details, and it is a pretty simple tool where we try to measure the acceleration and deceleration of the current momentum in the underlying instrument, and accordingly, the value will be bullish if the momentum is strong and driving force is accelerating, and values will be negative if the momentum is bearish. And here this periods, fast period, slow period, positive and negative values. Coming to the Bollinger Bands, this is a well-known technical charting tool, and it was developed by the technician Bollinger, Mr. Bollinger, and it is named after him. And this consists of a central line, which is more often than not is EMA. We can also use SMA or any other moving average, but mostly we stick with the EMA, and then two price channels are created. One is below and one is above it, using the standard deviation. For the day, we will be using the EMA 20 along with the standard deviation of 2 to form the Bollinger Bands on hourly charts, and with that we will use the AC2. This is a standard disclaimer. This webinar session is simply for the tutorial purpose, where we will try to build efficient algorithms so that you can trade in the financial market with the least amount of risk. Of course, no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing here, and extensive test runs and then the mock runs on the demo account are required to gain sufficient confidence in the efficiency of algorithms, and nothing in the webinar should be considered as an advice to trade or any advice for any particular setup. It's always up to your discretion. So with that, let's get started. First, we will see what we are going to do on the chart. So here, this is the hourly chart setup, and let's take the instrument as Euro USD. We will mostly work with the Euro USD, and this is the Bollinger Band on the hourly chart. So here, the underlying idea behind our today's algorithm development is going to be pretty simple. So what we will be trying to do is that we will be trying to go for buy trades when the price action is happening in the upper band of these Bollinger Bands. If the candle is closing above the middle EMA, that is the middle band, and if it is below this upper band, then the algorithm will keep looking for the buy trades, and if the candle closes in the this bottom half below middle band and above this lower band, then the algorithm will be looking for the short sale kind of trades. But of course, that's not all. We will also be using the AC2 indicator to determine the entry and exit point. So what we do here, you can notice that this is the 20 EMA band, and many times what happens that if we use the AC2, let us go into the input and output level. So here this is the fast period defined at 5 and the slow period is defined at 34, and the price is going to be median price high low divided by 2. Now one interesting thing is here I have defined the time period for the AC2 as half an hour. If we make it 1 hour, as I was preparing for this session, I noticed that it's better if we an instrument used from chart 1 hour. Okay, and so here now, as I said, the requirement is that a candle should be closing below this middle band and above this lower band for a sell trade. So suppose here we notice that this requirement is going to be fulfilled, and as per AC2, when the momentum shift from being in the bullish, that is when there are no more positive values and the values turn negative, the output value, then we are going to go for a short sell trade. So this mark the time, it is 19 GMT of 14th February. Now if we see the candle close of 19 GMT on the 14th of February, here it is. So this is the closing, and it is below this middle band, and of course above this lower band. So this is the kind of trade where our algorithm will be at work. It will try to find such opportunity and then go for short sale. Now if it goes for a short sale here, then the price drops from around 1.0838 to 1.08294. So not much of an volatility there, but still the price continues to drop lower, and then I think it is Friday. So on the next Monday after the open, the price rises as much as 1.085. So that's around 12 to 13 pips higher compared to the open price, and then again it drops and it goes far below our entry point. So these occasions, suppose if our trade was closed on the Friday itself, then again on Monday we see that here the price on 13 GMT on 17th of February, we are again having trend change as per the AC2 setup, and then if we take a look on the Bollinger band candle close of the 13 GMT, so the candle close is also happening below this middle band and above this lower band. So again we can go for a short sale here, and again we will be in profit. So here mostly this setup works pretty well. Of course, not every time we will be making losses as well. So you can observe the charts like this, and see here the momentum shifts from bearish to bullish, and it is 18 GMT of the 19th February. And let us see the candle close. So the candle close is just slightly above this middle band, and then that means the buy trade should be open, and then from there on the price indeed rises around 10 to 15 pips, and then again it dips lower. So it also depends on how volatile the situation is, and then we have to trade accordingly. Again the price dips here, and then our algorithm will be opening trade somewhere here, and then the price dips around 20 pips, 15 to 20 pips. So that's how it's working, and so far so good. But many times what happens that we are kind of bit behind the price, and the price action moves too fast before we can go for any position, and then it is too far away from our desired price zone. So here you can notice that the price action was pretty steep, and in 1 hour the price jumped by around 30-35 pips, and not much of an opportunity would have arisen for us. to trade here, and we will not be taking trade if the last candle close is above the upper band. We want, when we are looking at a buy trade, our requirement is that the last candle close of the hourly candle should be within this price band, not beyond this and not below middle band. So let's see. This is the way it is, and here in yesterday's trading session on 2 GMT. So when is 2 GMT? It is here. The price has traveled too much. So I think what we can do is it's better if we utilize the AC2 in half an hour time frame, and then use the 20 EMA Bollinger Bands. Just from the chart, see here, I will show you the 30 minutes and use from the chart side channel. Okay, so here we are. Now you can notice that the trend change as and when it happens. So here you will get a signal generated for a buy after the trend changes from bearish to bullish. So one signal will be generated here, and then it's let me see here on 10:13 GMT somewhere here. So a sell trade will also be generated here, and that trade will not go far, and it will mostly close in loss. And here also on 22 GMT, the price is somewhere here, but no sell trade will be generated. And once the price tries to peak up, a buy trade will be generated here. So this half an hour AC2 will keep us pretty close to the developing price action, and we will get a better idea, and we will not be experiencing too much of an lag between the shift of momentum as per the Bollinger bands. And that's why I think it's better to utilize this half an hour AC2 setup along with hourly Bollinger band. So let's see how it will work after we give it a shape of the algorithm. This is the algorithm which we were developing till yesterday, and today we start afresh. So we will name it as February 28th. And this time around we will not use pending open, we will simply use the market open. So first of all, we will do the candle subscription, instrument subscription. Let us try to do stuff with a bit of logical. If we will need 3 blocks at the first go, as we will also have to define that we want the current position amount to be 0, and because of that, let's connect it here. We will give it a hue of pink so that we will know that flow is going. And let us bring in the default instrument, default variables. This is the default instrument, and here we select Euro USD. It's already there. So Euro USD is there. If you want to change it to say USD JPY or any other currency cross, then you can change it simply by selecting the instrument from this drop down. And now to do the candle subscription, we see on candle, And let me see how we had done it last time. Last bit candle instrument. Okay. And we connect this as equal, and here we choose Euro USD. Euro USD, where it is uh, it's proving a difficult task to find Euro USD. It is here. Okay, we got it. And now we again want it to be equal. So suppose the default instrument, that is Euro USD, should be equal to the last candle instrument, and that candle instrument should be the Euro USD. So we have done the instrument subscription so that our algorithm will be trading and placing orders only for the Euro USD. Now let's bring in the position info, all position amount. We put it at 0. We don't want any position to be open if there is already one position open on our account. And now, as I said, we will need to bring in Bollinger bands and AC2 indicators. So let's look in the indicator setup, where we will look for Bollinger bands. We will bring in the Bollinger band here, and I think one Bollinger band, as we are not comparing the prior value, we are simply going to use the single Bollinger band here, and that should be good enough. So what we do, we define it at position amount should be equal to 0. That means there is no current position open, and we define it at 1 hour. Make it hourly, no shift 0 as it is, standard deviation is of 2. MA type, here we will choose the MA as EMA, and then we have got this upper band, middle band, and the lower band. These are the values, and now we bring in the AC2. When we will be going into the Bill-Williams indicators. In coming sessions, we will also do alligator, this awesome, BMFI. We will try to cover most of the indicators which can be used to optimize our trade setup. So we have brought in these AC2 and here we will need to connect this block of the Bollinger band with AC2 band, and as I explained while looking at the chart, that it's better if we keep the hourly, not hourly, but the time frame at half an hour for acceleration deceleration oscillator. Then that will cut out the time lag between change of trend and our positioning or placing of order of 30 minutes. And what we do, we output values positive and negative, and here these are bands we connect now. So here I hope you got a bit of idea of how things are shaping up for our new algorithm. And since this time around we are not doing any pending order, we will need to do lot less calculations. Last time around we were using pending orders. This time around we will try to work with market open and see how it works. So here shift 1 and shift 2 means that on chart we will be utilizing the prior values of the AC indicators, acceleration, deceleration oscillators. So here if the current value is in green, that is positive, then the prior value would be checked, and if it is also green and the value before that negative, then it will mean that a trend is changing and the algorithm can go for a fresh trade provided the candle close here is below the upper band and of course higher than the middle band. So that is the basic idea behind these trade setups. We can also always bring in additional requirement if we see the trades are not being executed as we thought it should be. So so far we have got this Bollinger band and the AC2 indicators, and now we will need to connect this to the multiple action blocks. We try to find the trading and multiple action. I think it's in logical. Yes, it is in logical section. And multiple action, we will put it on the lower side so that and also we will need to bring in the historical candles so that hourly candle close would be clearly defined for us, and we will need it for making sure that the candle close is happening within the price band. So we bring in from info section the get historical candle, and one will be hourly while another will be 1 minute, just to make sure that last minute the price was or we can also use last tick also, or yeah, maybe yeah, we can use last tick. So we will use the last tick price, and here the instrument default period is of 10 minutes, so we change it to 1 hour. Hourly upper side is bid and we make it shift 1, then it will be 1 hour back, and then the candle 17 we change it here, and we have utilize this as and then we will also need to use the loop viewer, and I think our new variable must have been created from where we will need to auto created variable. Here it is, candle 17. From here we can utilize the values the candle close will be needed while placing the order. So far so good. And now let's get started with putting conditionals. We will need to again bring in logical blocks of if. So requirement is that last candle close should be, first we will develop the buy side, and for the buy side we will need the last candle close to be above middle band and below the upper band. So here there is the candle 17, we have defined it at hourly, and shift period is 1, that means 1 hour back, and we see to it that this candle close is above the middle band. So we get it here, we connect it to this side, and then we make sure that the candle close is above, greater than the middle band, and then the candle close should also be less than the upper band. So we again bring in the upper band. So I hope you got the point where we are trying to make sure that the price action is happening in the territory as defined by us. So far so good, our candle requirement has been defined, and now we will need to see to it that last tick is also above and below the upper and the middle band. So we take in the last tick, again we will need 2 if blocks. First, why we are bringing in the last tick is simply because sometimes, see here I will show you that candle closes as per our requirement, but then the price action, if it is pretty sharp, then the price continues to move higher in the next hour as well, and if we don't bring in the last tick, then the trading conditions will still remain valid, and that's not something we want. So because of that we bring in last tick and make sure that at any point in time the conditions are supposed to be met. So we bring in here while going for any buy trade, we ask we will use the on tick value of the ask side. Last tick ask should be greater than the middle band and less than the upper band. Here last tick ask, and again we will utilize the upper band and the middle bands. I think today we will be only able to develop the buy side, and tomorrow we will complete the sell side, and then test run, and if required we will do the further optimization. Let's bring in here the upper band at one if block and the middle band at another, and then we put it here. The candle close is supposed to be less than the upper band, and here the last tick ask should be greater than the middle band, and it should be again less than the upper band. So we bring in one more if condition, and then we try to make sure last tick tick ask is less than the upper band. Okay, so far so good. We have come this way, and now what we need to do is we need to define the acceleration deceleration oscillators conditions now. So we again go back towards our defined parameters and try to see how best we can optimize the setup. So when the buy trade is supposed to happen, the buy trade should be done when the momentum shifts from being in the bearish territory to being in the bullish territory. So here, when the values turn from negative to positive, a buy trade is supposed to happen only in the next half an hour. So if after that the last value, last candle's value is in the bullish territory, and one candle before that, then the trade will not be getting executed. So let's shift to, that is 2 periods back. The value should be negative, it should be in the bearish territory. So we write here below 0, and then we bring in additional if condition where we will see to it that the last half an hour's AC2 value is positive above 0. So we utilize this. That will mean that the trend has shifted from bearish to bullish, as the values have shifted from negative to positive, and it again above 0. So it should be less, then it should be more. That's all we want. And let me keep it here. So it's looking good enough. Now let's bring in the market open. We are not doing pending open today, so we can now directly connect for the buy side, and with that we will end our today's session also. So before we end, let's add this buy side. So tomorrow we will complete the sell side, then the test runs, and if required we will do the optimization, adding some additional indicators, or bringing in some price action requirements to make our algorithm more profitable, more efficient, and it should be greater than the second input, which is 0, the positive value. It should be here. And now default trade amount, we keep it at 0.1 million. 0.1 million. Slippage, I guess 2 pips should be good enough. We bring down the stop loss to around 15 pips for a 1 hour algorithm. An algorithm depending on the 1 hour setup. The 15 pips stop loss should be good enough. And here I think 20 pips target should be good enough also. You can make it more or less. You can change the stop loss, or you can change the target profit as per your requirement after do testing to optimize the algorithm to your best of advantage. So here we are going with the stop loss of 15 pips, take profit is of 20 pips, and slippage is going to be of 2 pips. So we are almost done with the buy side. So let me recap the conditions which will be needed for the trade to be executed. So the last hourly candle close should be greater than the middle band, and then that candle close should be less than the upper band. That means that price action is happening within these Bollinger bands. Then we want to make sure just at the moment of trade being executed, the price action is still within the band. So last tick tick ask should be greater than the middle band, whereas last tick tick ask should be less than the upper band. That means even current price is within the price action zone, within the permissible zone. And then we want to make sure that trade is only executed when the momentum shifts from one side to another. So we have brought in this negative value. Uh, at any point in time, the AC2 is either giving a positive value or negative value. So if the value is negative, then the positive value is close to is at 0, and when the AC2 is in the bullish zone, there is no negative value, it's 0. So here we can utilize this setup as like this, where we want the positive value should be above 0, and just 1 hour back before the positive candle closed, we want the value should be less than the 0. So that's it from my side for today's trading session. This has been a fairly simple algorithm, and I hope you have got the underlying idea of how we can utilize a simple chart setup on the chart to make and then run the algorithms in our trading account. So we will save it for the day, and we will again come back tomorrow and start working. I think I have named it as Feb 28. Okay. So I would like to thank you all for joining in. We will continue to work tomorrow also. See you tomorrow. Goodbye.